Good evening, membership traders. Friday evening, 10th of July 2020. And we have a runaway market in our hands. I take this opportunity to welcome all our new joinees to our trading community. In the Friday sessions, we generally talk about the index, few sectors and stocks at the beginning, and then we jump onto your questions and doubts and the trades that you've done this week. How can we learn from those trades? But before that, let's talk about the markets. Now, I have the Nifty futures weekly open in front of me, and we have 1, 2, 3, 4 consecutive weekly gains for the index. Not only has it taken out the 10,400-500 zone, but it has tested 10,850 almost. And at the current juncture, if I zoom in, you can clearly see that it's kind of stuck between two gaps. Now it has taken care of this falling gap. It has closed this gap, which will not be seeing any further next week. And there's a small little rising gap. So on a weekly chart, we have a rising gap. Very clearly, if you just look towards your left, this is where we had supports earlier. And we know how supports can work as tentative resistances in the future. This is the level we saw last time during the month of August 2019, September 2019. The levels of 10,700, and we can stretch it to 10,000, even 900. So 700, 900 kind of 200-point zone is where the erstwhile supports turning into resistance is. Going back to the daily chart, this is a rising channel which I've drawn with the help of RSI, and it's more or less within it and trying to go towards it. If you recall, in our last week's Friday session, I did mention about, I could draw this better. Let me try. I was talking about this wedge. It's a rising wedge. It's a rising market. It's not a all-time high kind of a market, but it is definitely a rising trend. And generally, when we see a price behavior like this, a sharp movement generally culminates either on the downside or on the upside. If it breaks out on the upside, it will mean a breakout. It will mean a pattern breakout failure, so it can rally much further above 11K. On the downside, however, if it breaks down, then we can see a sharp sell-off. Generally, when a rising wedge falls after a rising market, the sell-offs are generally sharp, pretty sharp, in fact. But nevertheless, I have been personally careful and cautious for the last 2 weeks. Yes, there have been stocks and sectors which have rallied further exceptionally, and my approach of being cautious has led me not to participate on them, but that's kind of okay with it. It's my choice that I've taken based on my research and my analysis and expectation. On the daily, we have a hook setup. We clearly have a hook on the daily charts, which got triggered today itself, and it bounced back. So I think I did mention this in our Wednesday morning session that every day's low is going to play an important role now. And we have another instance where the index had broken below the previous day's low. Going forward, I think the levels to watch for the Nifty is on the downside 10,696. That is today's low. Let's call it 10,700. On the upside 10,800, 850. So if you look a little more carefully, 1, 2, 3, 4, 5, after this gap up that we saw on Monday, this week the index essentially did not go much. Just the gap up of Monday is what makes to the weekly gains. The weekly gains of this week is attributed to the gap itself. Apart from the gap, it has not done much. It's kind of stayed range bound. So I do not change my view or expectation. I definitely do not want to add on long positions aggressively at this juncture. I'll be far more happy to buy at lower price. But lower price will only come when the index decides to come down. There is no sign of such. We have a hook setup which suggests that the market should ideally give us a short-term consolidation or a short-term correction. Looking at the 75-minute time frame, you can see here very clearly, not your classical head and shoulder top, but a clear sign of this kind of a pattern, where a breakdown of this level can definitely see levels of this and levels of this. These are the levels that you can work with. This comes close to the 10,500 mark. This comes a little above the 10,300 mark. Don't misunderstand me. I'm not being extremely bearish just because of the fact the market's not coming down. I'm not trying to be bearish per se, but I'm saying that these extended levels for the Nifty does not give me the confidence to go long aggressively. I had long positions, but they are primarily short-term trades in nature. But primarily, this is not the time or price to go bullish completely. And one sign of that you will see if I show you the sectoral performances last week. This is the list of sectors that I have. I'm using the Iris Plus software. And if I sort it in terms of gainers, if you see the top one, it's Nifty small cap. If you recall, for almost last 3 weeks, we have noticed this shift of performance and participation coming in from the broader markets. The mid and small caps did start to outperform the Nifty. If you listen to last to last Friday's videos, we have discussed that we see this shift, and I said that it's a good thing as well as not such a good thing. Good thing because we can see some broad market participation, and not a good thing because generally when the small and mid cap starts to overdo the benchmark index, generally tells you that the market has gone risk on. The market is willing to take more risk, and that can lead to a top out. We'll see whether that happens or not, but yes, Nifty small cap is your biggest sectoral gainer, followed by metal, which is struggling at this gap down, and private banks, Bank Nifty, Nifty Financial Services. So the private banks, banking and financial services do matter a lot to the overall market, and they have performed pretty well this week, outdoing the Nifty, which was up 1.5% this week. I'm sorry. On the downside, we have energy, media doesn't matter too much. There's Sun TV and Z, etc. FMCG. Now, FMCG, we've been talking about the level of 30K and how a breakout above 30K is important. We have seen that breakout. The index is sustaining above that breakout. And going forward, if the risk-on nature of the Nifty slows down, then FMCG should continue to participate. If that is the case, can we take a look at the constituents of FMCG? Let's see what's happening within that space. So if I run a 1 week report designer on FMCG, the performance, what do we get? Tata Consumers, exceptional gain this week, all-time high, sign of a very, very strong counter. I'll take the example of Tata Consumers just to tell you a thing, that when we see a rising wedge in a rising market, generally they lead to a correction, reversal in nature. If this anticipation does not turn out, then the opposite move can also be equally strong, and that's what we see exactly in Tata Consumer. So very strong counter, buy on a dip, no doubt about it. McDowell, this was the aim and shoot, our swing trading setup that we had. I think we had discussed this a couple of times in our morning sessions. Very nice move, back to his previous size of close to 640. Britannia, I always suggest that it's a very good long-term cash portfolio stock and everyone should have it on your portfolio. Though it's a little pricey, it's above the 3,500 mark, but still definitely worth the stock having on your portfolio. Hindustan Unilever picks up today. It's a momentum laggard. It moves for 3 days, 4 days, and slows down, and that's exactly has been its nature. But Unilever can also continue to participate. The big stock in this space that is not participating is ITC. Of course, if I show you the weekly or the monthly charts, it's hugely underperforming. But on the daily charts, it's in that sweet spot what we generally talk about, the moving averages. And I feel that the stock sooner or later will give us a bounce back. I was also looking at the chart of Nestle consolidating, look for a breakout, and Marico, your swing long candidate, previous highs becoming lows. We can expect some movement from Marico also. Jubilant Food is essentially a disappointment because a huge move coming in on Tuesday intraday slips off significantly and then sells off for the rest 3 days. On the weekly charts, it's holding well. I'm quite sure that this stock will gain momentum again to hit a new life high soon. But as of now, it needs to deal with this support, which is close to 1600 mark. So that's FMCG. I think it will continue to give support to the market. Another sector and few stocks I would like to talk about and then take on to your questions is the IT. Well, if I look at the stocks that performed, NIT Tech, Mindtree. Now, I would like to take your attention a little bit and I'll share with you that mid-run IT stocks, the second tier IT stocks are likely to perform significantly going forward compared to the large cap ones. The large cap ones are performing, no doubt. Infosys, TCS, and HCLTech, out of which Infosys has the best of strength. Let it cool off a little bit. Please do not tend to go short on Infosys. It will not give you a significant downside move, but definitely look to buy on a dip. For your cash portfolio, I would always suggest, and I've been telling you this multiple times, Mindtree. And finally, the guy gives a breakout. The first move came early June, fizzles off. The second move came late June, fizzles off. And now we have the big move, and this can be a very nice move for the stock, which can take it to life highs. So please do take a look at Mindtree and NIT Tech. Both the stocks are looking good. Personally, I like Mindtree as a cash portfolio stock, and for trading purpose, definitely look at Infosys, TCS, as well as HCLTech. TCS is hovering extremely close to its life high, and there's no doubt that it will not be able to surpass that. So the performance from IT FMCG, I think, will stay. It will be a little mixed, but it will stay. Banking and financials will continue to react the way they do all the time. When the markets come down, it will be that sector which comes down first. There's no doubt about it. My only inhibition going forward is the small cap index is the weekly gainer. The top weekly gainer is the small cap index. So I'm taking the move from the index this week with a pinch of salt. I would be proven wrong as the market extends further up towards 8K. I'm not trying to put in a point that it has to, and it will revert down. But in terms of, let's say, downside risk, in terms of if I buy with a limited stop loss on the downside, I'm still not comfortable at these levels. I hope to look for some good shorting opportunities next week if I get so, or else at lower levels, I'll definitely be a buyer, no doubt about that. Considering the highest weighted stock, Reliance Industries, hit life high, followed by many other stocks which have hit its life high and crossed the highs of early 2020. We are in a market which is very, very different in nature, and we shouldn't doubt that the market does not have the strength to go back to its life high. It will definitely, but before that, I personally, as a trader and as an analyst, and as I track the markets, I expect relatively lower price to get into. Let's see what's in store for me. All right, So that's the call on the index and the sectors. Let's move ahead and please share your trades and your questions.